it does kind of feel like something is breaking. And I think the terminus here, the spot where, you know, I don't even know what you want to call it, the inflection point here, I think is going to come when the economy in the US finally does have this next sharp deleveraging. Because, the last time the Fed bailed everybody out in 2020, there were a lot of memes and a lot of jokes about it because you got all these Bitcoiners now that understand monetary policy in a way that younger generations never did. So you have average people that understand how the Fed works, which that right there is like, the emperor has no clothes. People are figuring out that, what you had to be an economist to figure out 20 years ago, which is that, looks like a giant Ponzi scheme. So people are figuring that out now on their own. And, last go round through COVID, it was this kind of like running joke that like, oh yeah, all right, what do you got? Infinite money? Like you're just going to print forever to solve the problem? Like, you're a Bitcoin guy. You've seen all the memes. This go round, fucking everybody's on notice. Everybody's looking at the Fed and just, like that Simpsons episode where they're just like, say it, like say it, and then he's gonna be like, all right, we're cutting rates. Everybody's gonna be like, oh, we do it. So like they've become a fucking like caricature joke to the everyday person. And I think that really could be a loss of confidence that I've been talking about will happen for a decade, but hasn't. I wrote an article back in like 2016 called "The Fed is Gutless," and by the time we realize it, it'll be too late. And I think about that title all the time. People get it; they know what's going to happen. It's not going to be any surprise to people that they're going to bail out the markets, and the stock market's going to go up, and the inequality gap's going to widen. The difference is like people now are going to react to that differently than they did in years past, and so it really does feel like this deleveraging, like this go round, it does feel different. Like for me, I don't know. For me, it feels different. COVID, I told people this is not a financial crisis. And matter of fact, after COVID, after the huge dip, I said, not financial like 2008, I mean. I was saying, oh, what looks attractive to me are the banks, Goldman, JP Morgan. They were trading at, half times book, things like that. At a point, I remember buying American Express, a couple other like financial names. They've all tripled since then, quadrupled since then in like 4 years. The idea was though that that's not, we were just having a legitimate like production and supply chain slowdown. It wasn't a systemic financial collapse. There was no like major contagion like there was with AIG in 2008. This go round now with what's happening in gold coming out of that, I think, we overshot the mark so fucking far and people were put on such notice about how oddly the system works that this go round now, it does feel like that sovereign debt style, issue could finally be at hand. The one that Peter Schiff wrote a book about like 20 years ago when he wrote The Real Crash, which he to him it's obvious. He can see it. Okay, it's coming and it's coming tomorrow. But like, no, it didn't come tomorrow. Sometimes these things, we're talking about events, and I wrote like you said, the end of empires. Like these things happen over the course of 20 years, 40 years, 50 years, 200 years. So, but it does feel different, man. And I'm not trying to be sensationalist at all in saying that, but I've never seen anything like this in the gold market since I've
Yeah.
been following gold and silver. And it doesn't really, I can't remember any time that I've been in the industry where inflation has been out of control, and the jobs numbers are going to start to decline at the same time. So, name me another point in recent history where the Fed has had to cut rates with inflation at 2.8%. Like, that's not good. Like that's an unenviable position for Jerome Powell to be in. And the consequences are going to be bad. The only question is where they're going to show up and when.
100%. And I remember back in the 2010s when I was thinking hyperinflation was coming and being a real big gold bug, but the price just underperformed, right? We were at 2015 and gold was at like $1,100, and there was like a sovereign debt crisis in Europe at the time, and there was all these reasons why it should be performing like it is today, but back then it was just flat, and that led me to Bitcoin. I was like, there's got to be something else, some other alternative here to be a inflation hedge or a sponge for all this excess liquidity, and that's what opened my eyes to Bitcoin. And listening to your podcast, you had Larry Lepard on the show multiple times over the years, and he kept nudging you towards the orange pill. And it sounds like you finally took it, or maybe just a small one. But Bitcoin is part of your portfolio, and you do see it as a defensive mechanism against this crazy money printing now, correct?
Yeah, I kind of see it. I mean, I almost kind of acknowledge it as a risk asset. I mean, it trades like a risk asset. I still think it's probably more of a risk asset now than it is sound money. I just think it's a risk asset that has the potential to go significantly higher. If not, I think it'll get killed when we have our initial sharp deleveraging. I think everything will. I think Bitcoin will probably get killed more than gold. But then I think after that, then I think, it'll probably skyrocket with everything else. Um, to me, it's not, to me, gold is still first and foremost 90% of my sound money kind of foundation. My biggest positions are gold miners, silver miners, gold, physical gold, silver. Um, those are huge positions for me. But Bitcoin is a small position. And as I explained on McCormick's show when I did his, my coming out party or whatever you want to call it, it just it feels like an idea that's time may have come. There are a lot of reasons to doubt it. I think also too, there's a lot of unknowns going forward, but um, I like the idea that it can be seen as an exit ramp from the system as it exists today. And I like the fact that it could return the power to a significant amount of people that wouldn't otherwise normally have it if it does, garner long-term worldwide adoption. Um, and, I'm not about to sit by and not be a part of that if that is what takes place. I mean, I'm prepared to lose 100% of what I have invested in Bitcoin. Um, but I also don't want to not be along for the ride if it does become an idea whose time has come. I mean, I'd like to think I'm smart enough to know what I know, and I'm smart enough to know what I don't know, and I don't know you know many of the intricacies that a lot of Bitcoiners do understand. I know the basics. I know that there are a lot of people smarter than me that, have a lot of confidence in their Bitcoin investments. I know that, when Michael Saylor says something like, all right, well, what the problem is with this system, what are you doing to fix it? That like, okay, that rings true a little bit. Um, but I think that Bitcoin is always going to be superseded, at least for the time being. It's always going to be superseded by gold, and you're seeing that here over the last 6 months or year or however long, where gold has really gone bananas, and Bitcoin has kind of underperformed gold because the shit is really hitting the fan here. And I think Bitcoin still trades like a risk asset.
Thanks for making it to the end of the video. If you could drop a like and a share, it would help in our mission to accelerate adoption. If you're looking for more Bitcoin signal, join over 10,000 readers of our newsletter, Bitcoin News Weekly. Every Monday morning, we send out the biggest headlines of Bitcoin to keep you in the know in under 5 minutes. Links below in the description. Then come hang with us live every Monday at 11 a.m. Eastern. We break it all down live on stream with a new guest, and you can add your 2 sats in the chat. See you next week.